Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Dave Weisberger. He's the CEO of CoinRoutes. Dave, as always, thank you for joining me at MarketSite. Your new favorite topic is the spreads in the cryptocurrency market. What's on your mind?
So it's interesting, and by the way, thank you for having me. You know, at CoinRoutes, we've set out to try to bring some rationality to the market, and what's happened over the last few weeks is particularly interesting. So we have two different types of consolidated data feeds. We have one that includes the feeds from the exchanges, because fees in crypto are actually larger than the bid-offer spreads. So if you look at the second one, which is we consolidate the gross prices that the exchanges publish. The second one is almost always cross. The bids are higher than the offers, et cetera. And so we have both of these things, and we're ideally trying to create a consolidated tape for the crypto markets. What's been fascinating over the last month is in the deep weeds of crypto, there's a cryptocurrency called Tether, otherwise known as USDT, which is supposed to be tied to the dollar. Now, there's a lot of innuendo and facts going back and forth, not a lot of facts, a lot of innuendo about whether Tether is backed. The reality is, about a month ago, Tether broke its peg, meaning that it went from $1 per Tether to down to into the 90s. Right now, it's sitting at about a 1% discount. For periods of time, it's been a 2, 3, 4, 5% discount and back and forth. What that did, however, was it meant that the most popular sites for publishing cryptocurrency prices have been wrong.
Right.
Flat wrong.
And they're all different prices, too.
Well, no. I mean, so if you look at CoinMarketCap or Crypto Compare, they've been saying that the price of Bitcoin was anywhere from $200 to $100 high. Right now, it's around $60 to $70 above where the real price is actually trading. And why is that?
Yeah,
it's because they include exchanges that price Bitcoin in Tether. And because Tether's at a discount, their prices, of course, are at a premium because, you have to offset it. Markets work that way. The reality is, unless you actually dig in and use like what we do at CoinRoutes, and there's probably others, but what we're doing is we look only at exchanges that trade in dollars, and we give the dollar price, only at exchanges that trade in Tether, we give the Tether price, and so we're more precise. The result is millions upon millions of retail investors have been misled about the price of crypto over the last month. It's actually very interesting, and not many people are talking about it. Because if you look under the covers, all of this is available. You can see it. But people who casually, like the same person who would casually look at the Wall Street Journal and say, I see the price of IBM, they don't expect that that casual look will be wrong. But in crypto, if you casually just look at CoinMarketCap at the first page and see this is the price of Bitcoin, it's wrong. And it's been wrong for over a month.
Are there arbitrage opportunities like that exist in the equity and debt markets when you see that pricing off?
Sometimes. There's two different types. There's good arbitrage and bad arbitrage. Good arbitrage is when people see on one exchange the price get out of line and they act to arbitrage that versus other exchanges, and it keeps the exchanges more or less the same. That's a valuable function because it allows someone who only has an account in one place not to have to pay too much. Now, there's not enough of that, and we have routing and other things to try to help make that happen for people. But there's also bad arbitrage. Bad arbitrage happens when someone wants to trade over the counter and they're looking at the wrong price, and their dealer is able to fill them at that wrong price, and then they just make money on the unsuspecting investor. Now, I'm not going to accuse anybody of doing that, but since most of the retail flow, or a lot of retail flow from various venues, go to market makers, it's entirely possible that that's happening. It's possible it isn't. But there's a lot of OTC trading. Tab just came out with a report that said that 3/4 of the market is over the counter. But as far as I know, other than CoinRoutes, I don't know of any place that actually has a definitive price that could be used for those transactions to be priced. That's what I would call bad arbitrage.
Do you think part of the reason is, too, that there's so many exchanges, it's so fragmented?
Yeah, it's a very, very fragmented market.
Right.
I mean, look, equities, we have 13 exchanges, and just in the United States alone. Remember, crypto's global. So when you look at the fact that there's 200 exchanges and probably 30 or 40 that have significant volume, on a global basis, that's not really that much. But the reality is there's lots of small ones, and then there's lots of over-the-counter desks that are trading in various levels of blindness toward what the real prices are.
I mean, I would imagine there's going to have to be some consolidation at some point.
Oh, sure. I mean, look, at CoinRoutes, our strategy is to be a network of exchanges because we see everyone jumping into the exchange space because, well, look, Coinbase just announced a new funding round that valued them at $8 billion. So, you have someone who's valued at $8 billion as the leader in the exchange space in the United States, and you're going to get a lot of people trying to become exchanges. We look at it very differently. We look at it as, look, let them all become exchanges. We'll help people connect to those exchanges. So we're one level down. As a result, we have fewer competitors. So,
so
that's
that makes sense.
Right. Well, that's what we're doing anyway.
All right. Well, thank you so much for joining us at MarketSite, and thank you for joining me today. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.